Welcome to Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Aaron, with us on the telephone in the studio. You look different, Aaron, here.
I do?
Yeah, you look a little more square than normal.
What are you looking at?
The phone. So, okay, so we're still at it. We're talking on the phone, and the markets are still rambling on, aren't they?
They are. It's been a rough week, but, what week hasn't been? The ups and downs and the weeks, and we get to the end of the week. And I guess the biggest relief is we know, this is going to end at some point, and we will have some relief at some point, but it sure feels like it's slow and, dragging on. And, the big concern with a lot of investors and even, economists. I just saw something yesterday morning. They have this group of economists that they poll, and I read this sometimes, and I usually don't bother with it, but it's kind of interesting today because, if economists were kind of split down the middle of what's going to happen a year ago, they are really out there right now. Their votes on certain things, how the economy's going to do or what's going to happen, it is absolutely 50-50, almost split right down the middle of who believes the economy is going to recover, nicely this year, and the other half says not recover nicely this year. And it's all about the virus, right? If
Right.
able to open back up. I mean, if our virus numbers continue in the path that they're going, at some point we're going to be at zero just because of those numbers are dropping significantly. But if, something changes, right, a few months from now or whenever they keep talking, it's possible. It's all about that, what governors are going to quarantine again or shut down, and how many governors or even mayors, I understand, might be extending this period, for months. And if we have no economic activity, it's going to cause us some problems, right, in our economy. So it's all about that. And, I have certainly full confidence that our scientists out there, are working diligently. I mean, nobody, whether it's for money or not, nobody wants to, let something pass that they can tackle it, right? Come up with a cure, come up with a vaccine, come up with what they're going to do. And they always have. They figured it out. But it sure has caused us quite the world over. Call it a calamity or call it whatever. It's a lot of grief for some, and, a lot of just waiting it out for others. So here we are.
The economists, the numbers you gave me, I guess really what it boils down to is that we don't know. It's split down 50-50. Right. We just don't know, not only from an economic standpoint, but from a medical standpoint. And we just got to be play it safe and take it one day at a time?
Mm-hmm. One day at a time. And I've heard some people say, and I think I'm in that 1 week at a time situation. I wait till we get to that Friday and then Monday come in and then see, what a week's time did for us, with the market, with, the virus numbers, with the opening up of the economy. It's hard to do or think a day to day. If you do, it'd probably drive you crazy. But that's how I've been kind of looking at it. I have been watching the market returns even more closely, of course, this last few months. And I have said this in many shows in the last couple of weeks or a month, that we hit the bottom on March 23rd. So the S&P 500, the 500 large companies, that index was down 30%. from year to date on March 23rd. So here we are, into mid-May, and that's, almost 2 months, right, that we've gone through, and we're sitting at right about minus 12%. So that's quite the change. And all those days in between, we have, gotten down to 8-9% from the beginning of the year. But that was our best recovery so far. But we've been sitting about that number. Many companies in the S&P 500, many, especially these smaller companies, and I chuckle when I say small, between like 3 billion and 10 billion. Those companies,
right?
They saw their share price, many of them, drop and then recover and almost double. So they dropped 75% in their share price from just in mid-February. So within a month, within 3 weeks, they lost that much of their share price and then got back 80 to 100% of it. So it is absolutely incredible. If a stock price is, and I'll see if I can get my numbers here. I didn't write this down. So let's say a stock price is $25 a share, and it drops to $10 a share. So that's pretty significant, right? 70%, somewhere around there, a drop. Well, if it drops to 10 and then gets back to 20, that's 100% return, right, on money? Many companies have done that. And those that are at the top, the large companies, and I've talked about this a few times in my conversation, the Apples, the Microsoft, even Walmart, the top companies, Amazon, the trillion-dollar companies there, they are at all-time highs, near all-time highs. So that's really what has held up that S&P 500, and that number, instead of being, minus 30, it's gotten a lot back, and it's minus 12 because of that. So those are your numbers for the week, and hopefully we can stay right there until the economy starts to, do its thing and start making money again, and then we can see recovery from those numbers. Hopefully that somewhere is our normal bottom right now for a while. And I'm okay if everybody else is okay with it staying right there for a while, because we don't want to recover in the market too much, because it's just a thought, right?
Right.
You said it. We just don't know what's going to happen. So let's wait this thing out and lick our wounds and deal with our negative numbers on our statements, but know that we're still contributing if we're doing that. We've already invested our money properly. That's what we're supposed to do if we're taking income. So we should have some protections in there. I know that's what I do for my clients. We just have to talk about it, right? Remind people and say, okay, this is what we plan for. And I've said this many times already, and I'll say it again. A sharp downturn in the market is not unusual. How we get there is usually what's unusual, right? Usually unusual. So that's just how that is, and we'll deal with it, and here we are. So I want to talk about the CARES Act that was passed. The focus has been on, the $1 trillion spent, and the payroll protection loans and the stimulus checks. But a part of that was about retirement plans. And there might be some opportunity for some people, but it's just good to know what the rules are. So one of the big changes, number one, is it was before, if you were 59 and a half or younger, if you took any money out, you'd be subject to a 10% early withdrawal penalty. And that has been waived. So if you were thinking about it, when I say thinking about it, you have an absolute need to take money out of your plan. And maybe it's not today because unemployment benefits are going pretty good. If you got it or you finally got it, and hopefully if you're still waiting, you'll get it soon. But that has helped out a lot of people, and I know I got friends and relatives that many of them, they're probably making more money now than they have in the last few years. So that'll get them by. But, we don't know what's going to happen 1 month, 2 months, 3 months. When this the unemployment benefits start stopping, we got to see how many people are back to work and what the needs are. But remember that you will have that available to you. You can take money out of your 401k, your IRA, if you're under 59.5, and not pay that 10% penalty. So, if you take $10,000 out, it can save you $1,000. You still have to pay the income tax, the federal and state income tax. Can't get away from that. But if you don't have the income for a year or your income's lower, you'll be in the lower tax bracket. Keep that in mind. And just like anything that I'm going to talk about, if you have questions about that, call me, 265-3540. Give me a call. I'm here every day. I got my assistant Corey in the office, and we both are, fielding a lot of calls and talking about this stuff. So just call me if you have questions. So I talked about the taxes. You will have to pay the taxes. Another thing you can do is take loans from your retirement account, which you could do before. So 401ks and other types of employer-sponsored retirement plans have loan options. Many do, most do. It was you can only take up to $50,000 per year per loan, but now they've extended that to $100,000. And they got some rules that they have reduced repayment amounts. So meaning you got to pay it all back to follow these rules, but you don't have to pay it back right away. You can start your payment period later on, such as when you start going back to work. Just keep that in mind that is an option for you. Remember, I mainly am suggesting that if you need this stuff, it's because your income needs are lower, not because you want to go out and buy a new car or do something, special with it. I want, retirement money to be retirement money, but we're in, interesting times, and you may need to tap that, take out a distribution, take money as a distribution, or as a loan. Keep that in mind. The required minimum distributions. So for 2020, if you're 72 and a half or older, or you have an inherited IRA that you own, you do not have to take your 2020 required minimum distribution. So we have made this clear to all our clients, and those that need the money, they're just going to take it, no problem. But those that don't need to take it, we're just going to let this go for this year, and they'll just keep that money in their account. Or in a down market, we don't have to sell anything to get them that money. So keep that in mind. The big thing is, I have told many people, often people set up automatic distributions from the retirement accounts in in a year period, and they might get it in the spring, they might get it in the summer or the fall, but it's automatic. If you don't want that, you need to contact your broker, your advisor, or your brokerage company to let them know you do not want that and you want it to stop at least for this year. So make sure you're doing that. Those are the kind of the highlights of what's happening. And now I know there's another bill that has passed the House that might get us another stimulus round, and that, depending on what the Senate does and how they work it out with the House, we'll wait and see. But the current stimulus check that has already been sent or received by most, I've fielded a lot of calls because there must be a lot of information out there on social media and just the internet in general. You do not have to pay that back, or you do not have to pay taxes on it. What's confusing about it is what they're giving you is a credit. And this credit is actually just a credit for your 2020 taxes, but you don't have to pay the credit back. So I've seen some articles that are written. You actually will get like a 1099 or a notification that you received the $1,200, and then that will have to go onto your tax return. So people think, well, if it goes onto my tax return, I'm going to have to, pay some taxes, or some reason I'll have to pay that back. There are some stipulations about how much money you might make in 2020, but that might put you over those limits. You remember the numbers, 75,000 and 150,000 is a married couple. They start reducing the amounts, but what I have seen is they're going by your 2018 and 2019 income, and it has nothing to do with your 2020 income. So everybody that received that money should not have to pay it back, unless you got it and you weren't supposed to get it, right?
Right.
For some reason.
Well, they're, crazy times, but the thing is, Aaron, there's a lot actually, and of course we always say that everybody's situation is different, but there's a lot of options that are out there available for people, and this might be one of the most important times ever to touch base with somebody and check it out.
That's right, and the a couple big things that whenever we have a down market, I talk about harvesting some losses, getting them on your tax return. If your advisor is not having a conversation with you about this, you need to ask them. Or if you're doing it on your own, why aren't you doing this? And if you don't know what I'm talking about, maybe you need to call me, and I'll explain to you what I'm talking about. But if you have a brokerage account, it's an after-tax account, and you do some trading in that account, either your advisor does it for you or you do it on your own. If you haven't been placing any trades in there, you probably missed some opportunity because you really had some a couple months ago, right, when the market was down 30%. But here we are today, and if you wanted, we're still down. But if you wanted to take a little bit more risk in your account, there's opportunities out there. So talk to your advisor. Call me, 265-3540. We'll talk about it. But make sure you're thinking about those things and planning for this recovery. Be a part of it.
Well, thanks a lot for talking with us, Aaron, and we'll talk again next week, right?
That's right. Thanks, John.
That's Money Talk with Aaron Ricketts, presented by Ricketts Associates, 3245 North Adrian Highway, Suite L. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us once again next week for Money Talk here on 103.9 WLEN.